Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of global financial update with me, Shikhar Garg, your host. And it's the day we say TGIF, but is that something international markets would be saying? We see the second straight quarter with contracting GDP numbers for the US economy. Uh, the Fed in itself was also kind of wanting to wait and see the data and give their cues on the action by the central bank eventually in the next meetings. So they would really be seeing how the data has been softening and the action on the inflation. But at the same time, we saw the equity markets rejoice the discounted 75 basis rate hike. So JK, I'd like to hear from you, what exactly should we be expecting out of markets?
Yeah, good morning. So we had bump, uh, blockbuster move in the stock markets in the last 2 days, initially triggered by Powell, who sounded somewhat, I would say somewhat dovish, not really so much dovish, but market really grabbed any hints of a slowing down on rate hikes as a positive sign and bought stocks. Yesterday's GDP data coming negative, it, actually erupted the debate on US being in recession. Technically, it is a recession, but uh, obviously politicians want to say that it is not a recession. Yellen has come out immediately saying that the broad parameters through which the economy has to be assessed, they are all doing very well. Consumers are spending, and so that's the way they want to put it. But technically, it is a recession, and already there are signs that uh, there, some speculate that there can be a rate cut as early as Q1 2023. Euro dollar futures are also rallying, and these are helping the stock markets to really rally. And yields have come down. US 2-year yield has dropped more than 60 basis points from a high of 3.38. Then the 10-year yield has broken below 2.70. So it's a whole host of moves that are suddenly happening in a very short span of time. I would say nothing materially has changed. It is just that market suddenly found themselves holding too many positions on the one side. Like look at dollar yen; it had moved almost 20% in the last 6 months, and people were pushing it higher, creating all sorts of stories around it. But the US yields stopped going up, and that is the first sign when dollar yen really topped out. And it is so closely related to the 2-year yield that the 2-year yield falling by almost 70 basis points has actually pushed the dollar yen down by more than 5%. So dollar yen falling is a big thing because that was the weakest currency. Now it is pulling up many other currencies as well. Australian dollar, the Canadian dollar, and even euro has not even gone below 1.01 after the Powell statements and the GDP data, although Europe has its own problem on the energy. So stock market rally, bond market rally, and the dollar fall all are happening at the same point of time. It is more to do with the positioning in the market. In my view, they were all been one side positioned, and those positions have been reduced in the or are in the process of getting reduced in the last few days. Of course, we have more crucial data coming up today. We have employment cost index, which Powell referred to as crucial, as well as the PCE core price index data, which is to be watched as far as the inflation is concerned. Then Chicago PMI, one more data that will be coming up. So market probably will right now, view with more positive eye rather than a negative eye, because that is where the trend lies right now. It's a summer. break that is coming up for the Western world, and having taken positions on one side for such a long time, it's reasonable to expect a profit taking. And they will probably come and have a look back at it in first week of September when the vacation period ends. We have to, of course, continue to trade in the interim period, and we will see particularly what happens to the INR. Definitely 79.70, which was holding steadfastly for quite a few days, broke yesterday, though it was after the OTC market hours, and it has broken with good volume, we can say. And the offshore deals, it has touched 79.50 as well. Now, when going by my experience in the USD INR, so long as it is in the uptrend, don't don't try to put it off. And when it starts coming down, don't try to put a bottom. So we were saying a minor correction to 17.50. Looking at the way it has moved in the last 5 months, one way market might find reasons to take some profit in USD INR as well. And I won't be surprised a move to 79 also is quite possible. For it to get support, we need again buying from strong buying from either oil companies or RBI themselves, but I doubt RBI will come and buy. So we might. And one more good thing for rupee is that in the last, entire month of July, outflow from FIS has been one of the lowest. It's less than $500 million compared to average of 5 billion in rest of the months in this year. So that's another sign that the outflows have been somewhat moderating, and possibly a lot of inflows have been holding up, particularly on the FDI side. We have started seeing some amount of 5G related flows. So I see dollar rupee correction going much deeper. It will find good bottom below 79, at least in the near term, and then we'll take it on from there. How the dollar index moves and signs about the US economy. So I'm ending this with a point that we are in a period where we are taking profit on all the positions which are run for the first 7 months of the year, and that is how I have seen it happen also over the years. It's the first phase between January to June, July, and then there's a profit taking. Again, reassessment is made in September. So fundamentals have, they can be interpreted both ways by the market, but that we'll come back and see how the view thinks when September comes. We also have some news about oil. OPEC meeting may take some positive view on increasing the supply, etc. So enjoy the ride for now, and we will assess as we go forward how deep this rally goes on. Thank you.
Wonderful, JK. And it's after ages that we hear that there is a possibility, or in a downtrend, we should not be putting any bottom to USD INR. So now, folks, we have started to see some bit of profit taking, as JK has mentioned, over the period of time. Though the trend has constantly been on the upside for USD INR, it is now that we are seeing some bit of correction happening after quite a while. And I'd also like to point out one of the good points mentioned by JK was the moderation of the outflows. I mean, we even saw some days where there were small positive flows by the foreign investors, but overall, the kind of outflows we've been seeing over the period of time has moderated quite well. On the ending note, I'd like to question one thing. As we've been seeing, and we saw the second straight quarter of contraction, do we confine our sense of economy or the phase or state of economy with these mathematical frozen numbers or concepts, or should it be on more different terms? I mean, politicians would definitely want to do it in this manner, but do we really have to see frozen numbers, or a freer method of understanding the state of economy? I'd let you guys ponder on this while we come back again Monday morning. Till then, thank you so much for listening.